You're listening to Ready, Set, Go Real Estate Investing Podcast, presented by Brandon Elliott. This show will be going over all aspects of real estate investing and is intended to educate, motivate, and prepare you to take action on your first or next real estate investment. For more information, please visit BrandonElliottInvestments.com. Thank you for listening and enjoy.
Welcome back, everyone, to Ready, Set, Go Real Estate Investing Podcast. I am your host, Mr. Brandon Elliott. I'm excited today. I'm excited because this is, I wouldn't say out of the ordinary, but it's not the traditional type of real estate podcast, right, that we've done in the past, or like the credit only, 0% interest credit stuff that we talk about very frequently, right? It's none of those things. And I mean, we're almost at 400 plus episodes at this point. So we got to start adding in some other investment opportunities today. And so I'm really excited to have Cristine with us because she's been in the game for the last 7-8 years, living over in Austin, Texas, and really focuses on helping other investors with pre-IPO investments. She's a broker, and excited to hear more about just kind of diversifying your investment portfolio, right? And seeing what else is truly out there besides just real estate, right? So this is going to be a fun episode. I'm excited. Cristine, what's happening? How are you today?
I'm doing good. Great intro. Excited to chat with you, Brandon. Thanks for having me.
Yeah, thank you. I appreciate you making some time. So talk to me. First off, how the heck did you get into this space? Did you have some friend, family member, or like, how did you become a broker in this space? What just stemmed from that? Why?
I had a background in finance, starting originally with investment banking. And then I wanted to parlay that into tech. So I moved to San Francisco like you're supposed to, and was looking for a really interesting startup. My worst fear was going to a startup with a terrible business model that, would never succeed. So I was looking for the right one. And I got kind of lucky and stumbled upon a company that was trying to build a stock market for private companies.
Okay.
And that idea immediately struck me. I immediately bookmarked that because I thought, at the time it was companies like Airbnb, Lyft, Uber, these private companies. And I figured it made a ton of sense that there should be a way to invest in them. Now there isn't. If they're not public, that means you can't find them on your Robinhood brokerage app or your Fidelity or your Schwab. So I love that idea, and the industry really took off, and my career really took off because I was falling in love with the work in an industry that was growing rapidly. So I really scaled in that organization, and fast forward to today, I run my own business helping investors get started in pre-IPO deals, meaning helping them access private high-tech companies, whether it's SpaceX, OpenAI, Stripe, Anthropic, and to actually be able to invest on the private market before the IPO instead of having to wait to the IPO to buy in their brokerage account.
I love it. I love it. So this is probably a great time to do all the disclaimers, right? Of like, this is not financial advice or any of the other nonsense. Anything we start dropping of gems here today, ladies and gentlemen, do your own due diligence. But Cristine, so you didn't have a family member or friend that was kind of in this space originally?
No, my family was actually involved in more traditional finance, more fixed income in the bonds and more risk averse kind of investments. So getting involved in the equity side of finance was very new, and I didn't have much of a family, path forward in that. It was something I discovered on my own. But it's a world where it's higher risk, higher reward, where people get to invest in companies that inspire them, that hopefully are growing more than the average company. And where I get to help investors find investments where they feel like they own a piece of the future. They're not just a bystander. They're not just watching Elon Musk in the news, but they're trying to actually have a financial stake in technologies that they think are changing the world as we know it.
That's so cool. I love that. So would you say that yourself are more of a low, medium, or high risk type of individual?
I would say I am a risk-loving individual. Calculated risks always. I'm very analytical, an overthinker, maybe a bit OCD, but I think you can approach risks with a healthy amount of, analysis and awareness. So in general, very, very risk-loving. I used to be very risk-averse. So that's what led me into investment banking and working 110-hour weeks just because I thought it was the guaranteed way to be successful. And what I found actually is taking a bit of risk, in my career and just sticking to my conviction in industries or companies that I truly believe are going to grow has brought me exponentially more success. So now I feel like to truly break the mold, you have to be comfortable with a little bit of risk.
That's so good. I love that. I saw a video the other day that was explaining like somebody in corporate worked there for 30 years and just constantly got like a 3% increase each year and eventually was making like six figures. And then there was another individual that she kept leaving the job every 3 years, going to a competitor or something, just leveling up and getting a 15% increase each time. And I just thought, like, how ironic is that to see, like, there's different ways to do it, right? There's different ways, but we all kind of go into this path initially believing whatever we learned in school, thinking like this is the path. And then the more due diligence you find, there's actually other ways, calculated risk, right? Always calculated, but you can actually set yourself up to earn a heck of a lot more. So talk to me when it comes down to maybe your first investment. What did that look like for yourself?
Well, in a broker capacity, some of the first deals I was helping people access back in 2018 were companies like Pinterest, Lyft, Uber, Airbnb, a number of other ones, Unity, back when they were private, etc. So that was really fun, just working across industries, everything from alternative proteins like Impossible Foods through to space and aviation. So a little bit of everything. In terms of my personal investments, I do like to dabble in some of these late stage high tech companies, the same kind of ones that my clients invest in. I also like to dabble in earlier stage startups that have to do with my industry itself. So they're building tooling or they're building technologies to further enhance pre-IPO trading. So I'm very, very niche in what I do. I actually don't do much real estate, if at all. I'm very, very specialized in this pre-IPO private tech stock investing world. So hopefully a counterpoint to what your listeners are usually hearing. But I know there's going to be real estate investors out there that, aside from their passion for real estate, also think SpaceX is building an amazing company and want to get involved. And we talked a little bit about diversification, but if you're looking for something in your portfolio that's high risk, high reward kind of category, or where it's more experimental, or where you want to allocate it to something different, it's an interesting industry to explore if you're a fit for the type of profile of deals.
I like that. Yeah, that's very cool. So when it comes down to investing in general, like what type of returns are you aiming for some of your average type of investors that are coming to you? Because a lot of these guys are putting down a minimum of typically about 100,000 or so, correct?
Correct. Yep. So returns, quite frankly, in this asset class are all over the place.
Yeah.
You see companies that do well for a while and then totally plateau. You see companies that seemed like very large businesses like FTX or 23andMe that have since kind of imploded or are being liquidated. Companies that, like FTX was approaching $40 billion in valuation and now completely collapsed. So you see kind of mid-level returns, you see absolute implosions of companies, and then you see really interesting success stories. So it's not uncommon in this asset class to see a company that does really well, and maybe you're up 1, 2, 3, 4, 5 times or more from your investment. That's not uncommon either. So risk reward. For example, SpaceX, back when I first started covering the company in 2019, valuation was, I want to say, in the 30s in terms of 30-ish billion valuation. And SpaceX today, their last valuation was 400 billion. So, if you invested in SpaceX in 2019, you're up multiples, on your investment by now if you've held through to today. So there's some really good success stories as much as there are risks and downside stories. It's really about picking the right company, but you have to have that risk appetite.
Sure. Is there a rough type of range that you see with the average, or are you tracking some of that stuff for KPI wise?
No, I try not to track returns too closely for regulatory reasons because it is such a risky asset class that I don't want to suggest to investors that if they purchase company A, they can look to this type of return. So it's a little bit different in that sense. It's a highly regulated industry because it is considered higher risk, high reward, and there's the potential to lose all your money in the worst case scenario, like with FTX.
For sure.
So yeah, it's definitely in that higher risk category of someone's portfolio. And how investors often think about that risk is one of two ways. So number one, you can try and diversify and be in a bunch of different companies. That's a natural way to think about risk. Number two, which a lot of people do in my market, is focused on a short list where you have absolute highest conviction. You really believe this company is a winner. And so it's almost the opposite of diversification. It's concentrating on your strongest conviction companies and forgetting the rest. So it becomes kind of a short list. And that's really, really common in this market as a kind of a maybe not obvious way to think about managing risk.
I like that. What type of time returns do people see? And is there any like tax benefits as well?
Yeah, timing is an interesting question. So when people buy these large high-tech companies pre-IPO, they buy because oftentimes they feel like these companies could be 1 to 3 years away from going public. And there's the hope that if it's a successful IPO, they could be up quite a lot in a relatively short time frame if that company is like on the brink of going public, let's say. So that's one way to exit, is waiting till IPO and cashing out your shares after a 6-month lockup period post-IPO. There are also some cases where people might resell also in a private deal after a number of years. For example, SpaceX, Elon doesn't really want to go public as far as he's reported in terms of SpaceX. So if SpaceX hypothetically is a private company for another 10 years, there's a chance you'll be stuck holding. But if there happens to be a replacement buyer to buy you out of your position a few years from now, that's potentially a route you can explore too. So the horizon can be quite variable because as a default, you have to expect that you'll hold for a very, very long time. But depending on the regulatory conditions, depending on the market, the door is open to maybe resell in future in some companies as well. So it's very custom. And some investors come and they say, I want to make a generational investment. Maybe I'll pass this on to my kids someday if SpaceX is private indefinitely. But you have other investors that are really looking for a company that could IPO soon. So there's, even within this asset class, there's shorter timeline focused investors and longer term focused ones.
That's so good. I love it. So when it comes down to pre-IPO, like how does a company get set up for that? That's obviously like a sit down, like I have a company, right? And so Credit Counsel Elite, if we decided that we wanted to take it public one day, then we would sit down and be like, what are all the things that need to take place to get it ready? And we'd start getting on our journey for the pre-IPO launch. Is that, I know that's a very ignorant type of question, but I'm clueless on this.
You're exactly right. There's a whole preparation process, which sometimes is quite extended. So there tends to be a number of companies that are considered pre-IPO because they have the scale. Sometimes it's the maturity or the financial scale or, other factors where they look like they are a company that could potentially IPO soon. Like an IPO target, let's say. But these companies will get further along with the process and you'll see certain things happen. For example, if a company hires a CFO, one of these super large companies hires a CFO, sometimes that's seen as a sign that they could be starting to have those conversations and prepare to go public. If you get a new CFO in, especially if they have successfully brought other businesses to the public markets, then you might be thinking, okay, we need to go through our books, make sure our financials are as strong as possible, make sure we have our story nailed down, et cetera, so that by the time you go public, you're in as strong as position as possible financially to make a good impact. So CFO being hired is usually a telltale sign for a lot of these companies, and a few other things. And eventually, when they're really, really ready to IPO, they're going to actually file the IPO filing with the SEC. And at that point, a more formal process starts.
Yeah. How long does that process typically take place once filed?
It can take a really long time. I mean, there's companies that have gone as far as to file and don't pull the trigger for quite some time after in terms of actually going to market. Or there's companies that start the filing process and the market doesn't like how they look. I believe WeWork got as far as to file. And then people started seeing community adjusted EBITDA and all these kind of made up figures to hide what a mess the company was. And once all that was disclosed publicly, they realized they actually weren't in as strong a position to go public, and that kind of fell through. So it's highly variable there as well.
Yeah, I like that. When it comes down to kind of what you were just saying, like hiring on the CFO, like it's probably more along the lines their leadership team who's being hired on. Have those players already been a part of other pre-IPO and like launched? Have they been a part of those type of companies in the past? I would assume, because we personally have like a CFO and a COO and all that stuff, but I don't believe they've taken companies to that. So maybe we would be not looked at potentially the same.
Yeah, it can be. I mean, you don't know what the discussions are for hiring a certain person behind closed doors. But if a CFO press release comes out, they've hired a new CFO, and it's someone that, originally took a competitor public, and the IPO was a huge success, then you can kind of put two and two together that they might be trying to position themselves for IPO. And investors in this market, it's very momentum driven, meaning if there are new news cycles or developments with the company that might indicate IPO, that tends to cause a surge in investor interest because they think this company maybe it's not 5 years away anymore. Maybe it's 2 years away from IPO, or maybe it's a year from IPO. And for investors that really care about that liquidity horizon, they might see these companies as being more interesting to invest in if the signs start to come out that they're looking at IPO more seriously. And then, of course, you have different types of IPO. So to your question about what to think through, and if you're preparing, there's also a traditional IPO where you're hiring investment bankers to go build an order book and help find you investors for your IPO, or direct listing, which more companies are considering these days, where you don't hire a bank at all and you kind of go directly to market. And then SPACs. So you could also merge with a vehicle that's already public as a shortcut to bringing your company public. So there's different ways to do it, and it can be quite an intricate, exciting world.
I love that. So you've closed approximately about 600 million or so as a broker, correct? Like in total, bringing together for other investment opportunities. During that time frame, what has been the most challenging for you?
I think part of what I love about this industry, but it is a challenge, is that it is constantly changing. So the type of companies I work with at any point in time, yes, I always work with pre-IPO companies, but if a bunch of those companies go public, that set of companies resets. And now I'm looking at a whole new stack of companies that's the next class to IPO. Sure. And so you're constantly having to learn about the dynamics of not just the market, but what is the market for SpaceX? What is the market for Stripe? And what are the differences and quirks for each specific security? So it's really, really nuanced. And a lot of times each company has a completely different process for stock investing. And it's often determined by, the founders and what they put in their bylaws or what they put in their stock plans and or if they choose to do a tender offer and all different things. So you're constantly adapting to new developments at the individual company level. In addition to changes in the market, like regulatory changes or just changes in supply and demand or who's getting involved, the types of buyers, types of sellers. So it keeps you on your toes. But I think if you're kind of obsessed with this market like I am, it's really, really fun. And there's lots of pockets of opportunity amid the chaos and amid the constant change.
That's cool. So talk to me, within this space, there's typically about 20 or so industries that get you really excited, like that are the main type of opportunities out there, correct? There's a lot to go after, but you're probably seeing most common ones keep coming up, right?
I would say not just 20 industries, but 20 individual companies, which kind of blows your mind. I mean, a disproportionate amount of the investing activity is concentrated in 10, 15, 20 individual high-tech private companies like SpaceX, Anthropic, Anduril, OpenAI, Stripe, etc. It's a really quite small list that dominates the interest of both buyers and sellers. So part of the reason for that is, like I mentioned, it's high risk. So some people respond to that risk by searching more narrowly for just a small number of high conviction names. That can lead to concentration in market activity.
Yep.
It's also because, these companies that are late stage tend to have the most pent up need to sell among their investor base. So if you are an early employee or an early investor at a company that is waiting a really long time to IPO and they've reached 100 billion in valuation or larger in valuation, you might have more of a need to sell than a shareholder in a company that's only been around for a few years and you've maybe just been holding that stock for 3 years. So the longer a company stays private, typically the more pressure there is from shareholders to get some sort of exit so they can get some sort of cash out of their holding, because the need can be really real. If you're an employee that's been in a company 15 years and most of your comp's tied up in stock and you can't sell it and you need to buy, you might be a millionaire on paper, but you can't liquidate that stock easily to buy a house or to fund your next business or to start investing in real estate, as the case may be. So both sellers and buyers tend to come to market more at later stages.
Yeah, that's good. Is there some learning curves that you've seen over the years that you've seen other investors make before coming to you, or have like during that process, that you could just shed some light on and ideally some insight on how to avoid those?
Yeah, it's a great question. I mean, there's definitely a huge learning curve. If you want to buy a stock on the public markets, oftentimes you can just open up an app, open up your Schwab or your Fidelity or Robinhood app, type in a ticker, and you can buy it. And you expect some sort of uniformity or a very seamless experience. But the private markets are totally different. And so if people aren't used to that and they come in, sometimes they take everything at face value, or they expect there to be one centralized place where they can just get everything. And the markets are really non-uniform. So there could be one seller that's offering a stock at a completely different price or even a different structure than another seller, even in the same company. So let's say it's Anthropic. You could have literally 3 or 4 different structures, just that I can think of off the top of my head, for buying the same company, along with different pricing or different timing. Sellers may have different timing expectations, etc. So that can be really difficult to navigate without that context. You know, if you're a real estate investor by day, or a small business owner, or a doctor, or a lawyer, how do you navigate that fragmented world where you can't just snap your fingers and know who your seller is going to be? You have to really find them, because that seller could be an employee of a company. That seller could be a venture capital fund, a specialist secondaries fund, a family office, a foreign family office sitting in Singapore. It's really fragmented in that way. So it can be helpful sometimes for people that are frankly so busy they don't have the time to spend their 10,000 hours learning pre-IPO, to just have an expert give them a bit more confidence going into the sourcing and the negotiating dynamics.
Yeah. So there's no like dashboard typically, or it's kind of more just one-on-one, having those conversations, signing agreements, I'm sure, and then sending out wires and so forth.
Yeah, pretty much. That's how I do it. The reason I do it that way, kind of old school, is there's a lot of players in this market that are raising a lot of funding to try and build those dashboards, try and build that digitized experience. And it's, at least the products out right now are not far enough that you're going to get that seamless experience like you have in the public markets. Yeah. So while it's not quite a perfect experience yet to buy these stocks online, a lot of people, quite frankly, just want a traditional experience, especially if they're putting in $100K or $250K into a single deal. You don't want to put that money into an online platform where you're not even speaking to a person sometimes, if that platform isn't just top-notch A++. So what I do is a bit different than some of the big platforms. I work with people one-on-one. Every single investor works with me, and every deal that comes through my company, I work on personally. So people get used to me, how I communicate and explain things. They can trust in my credentials and my background in this space, and they know that an expert is their broker on this transaction, not any one of a team of 150 employees, where you don't really know what you're getting at the end of the day.
Yeah. So when it comes down to investors, are they sending money into your company account and then you're sending to or how does that work?
Yeah. So as a broker, my business is essentially an introductions. So if you come to me and you want a specific high-tech private company, we'll first talk to you, get a feel for your goals, your size, your timeline, et cetera. And then I will go through my network to find potential matching sellers for you. So I help a lot with the sourcing of the actual investments.
Yep.
Once we have a sense of some potential offers, I can help explain them to you if there are structures or terms and things that are unfamiliar. Help you contextualize pricing and just be a resource to understand it a lot better. And then when you want to move forward, I will actually introduce you to your counterparty, to your seller. So at that point, you're kind of negotiating directly with them, and I can actually help you negotiate with the seller, but you're dealing with them directly. So one important thing is I don't charge any fee until the very end, where I charge my broker commission once it's fully closed and tied up with a ribbon. Until that point, you are only wiring money or anything like that directly to the seller that you've accepted to do the transaction with.
Gotcha. And then do you get fees on both ends from the company as well, or typically just the investor?
Typically, it's one or the other, but of course, there are exceptions because there's some bespoke deals out there. But I always guide my investors that they should expect a buy-side fee, which is typically a 5% upfront commission. And that's what you can typically expect. But if there are cases where maybe I'm getting a fee from the seller and I don't have to charge them, then that's a case-by-case basis, and I'm very upfront about fees, so you know the full picture going in.
Cool. I like it. And then is there any investment opportunities out there where there's tax benefits or write-offs or dividends like cash flow that get paid out regularly?
It's a really interesting question. And here's the thing. When you're investing in pre-IPO companies, for the most part, these investors, they're looking for growth of the actual growth in the price per share of the actual equity or instrument that they hold. You're not typically looking for dividends and passive income, anything like that. That's not typically a feature. So even these giant companies typically aren't issuing dividends or anything like that. And so it's less of an income play and it's more of the straight growth play, where if this company crushes it and they go public or there's a great IPO pop or what have you, you're hoping that you can sell the stock for a higher price per share than you entered in at.
It's kind of like if I'm believing in it beforehand and you're hoping that it hits the moon type of thing, a moonshot from actually going public, correct?
Sure. And I think the thing is that people don't realize always from the outside, but in the past, companies would go public at much earlier stages of their life cycle. It could be 5 years before they go public or something like that. These days, it's not uncommon to see companies that are 10, 15 years, even older, and still private companies. Yep. Or to see certain iconic founders like Elon Musk that don't really seem to be in a rush to go public at all. Or Reddit, which was a recent-ish IPO that was, I think, 19 years old when it went public. So there's a new phenomenon where IPOs are being delayed and where you have these absolutely enormous valuation companies that in any other era of the past would already be public. They just happen to still be private markets today. So, for example, OpenAI is gearing up for a new tender offer that values them at $500 billion. It is a unique quirk of today's world that you could be a $500 billion company and still not be available on the public markets to regular public market investors on their brokerage account. And so that's, I think, what's so interesting and important in some ways about the work I do and trying to get people more access. Because if a high tech company that's creating all these innovations like ChatGPT and all this other stuff that a lot of people really believe in, but if they can get to $500 billion in valuation and not be available to everyday investors, then all that growth up to that point can only be captured by the venture capitalists and the ultra rich people that are just doing deals amongst themselves and not the everyday people. So that's why it's interesting, really, because that's a lot of potential wealth that is shut out, except for people that find a way to get involved earlier on the private market in some cases.
That's good. Are you investing in any crypto, or how do you feel?
I've invested in crypto in the past, and I think I invested in 2017. It went up, it went down, and then it plateaued for a ridiculously long time. And I got so bored in the plateau that I eventually kind of sold it at net neutral. I think these days, how I think about crypto is I kind of find it more interesting to invest in some of the plumbing, like maybe something more like a Coinbase or something else just conceptually, where you can bet on the whole industry growing and less so one particular asset and all of its swings and things like that. So I've cooled a bit on crypto, but it's mainly because I've been through the song and dance already and the ups and downs and plateaus. So in general, I think it's interesting, and I'm sure it's going to be around for a while.
Cool. I love it. Any other final thoughts? Any insider stuff that we should know about or keep an eye out on?
Insider's a tough word in my industry.
Yeah. It's like, don't say that.
Yeah. I mean, I know a lot of your listeners are very real estate focused, and that's awesome. That's not my focus at all. But when you're thinking about your wealth and your overall personal portfolio, sometimes it makes sense to divvy up and look at different things. So this type of investing is not for every investor. I'm very upfront about that. But if someone, even if they spend the majority of their time in the real estate world, really believes in a particular company, whether it's Anthropic, whether it's Anduril, whether it's SpaceX, OpenAI, it's a really fascinating world to learn about. And I'm more than happy to have a one-on-one discussion and try and get people a bit more information so they can see if it's a fit for them.
Yeah, that's so good. I love it. Well, thank you so much for being so transparent and helpful today. This was very eye-opening to me, and I'm sure so many of the listeners as well. It's very, very good stuff. Yeah, excited for the future. Is there a certain company right now that you're like really excited for?
Like a huge amount of demand in SpaceX and Anduril and even Neuralink. So Elon Musk's brain chip project, which is a bit less publicized than the SpaceX, but really interesting company, which personally I'd love to get my hands on, although that's not an investment recommendation and not a solicitation of other buyers, but a company I think is really cool and doing big things.
How many different investments are you in right now?
Ooh, that's a great question. Probably 10 to 15. And how I've done investing is pretty concentrated myself in stocks where I have pretty high conviction, but I balance that with the vanilla side of my portfolio. So I do either really risky or I do pretty much as vanilla as you can get. If I'm going vanilla, then I go towards an S&P tracking ETF, like VOO, and it's ultra diversified, ultra liquid, etc. So I'm either really boring or I'm right on the brink of these higher growth or higher risk startups.
For the boring stuff, what does that look like return wise?
Oh gosh, I mean, literally, I'm talking S&P 500 tracking. So I think it's been returns in the teens recently. Although I don't know if we expect that to continue forever and ever. But there's some sort of statistic that only, I think, 10% of professional hedge fund managers can actually outperform the S&P, which is wild. So I think, at least in terms of public investing, you don't always need to be a genius picking individual stocks or trying to time the market. Sometimes that hurts more than it helps. And if professional hedge fund managers can't beat the S&P 500, why bother to a certain extent if you can get a solid return in a lower risk diversified way through S&P. So when it comes to vanilla stuff, I go really, really vanilla. I know there's people out there that pick individual stocks on the public market or they want an Nvidia or something, but I go really diversified when it comes to the vanilla portion of my portfolio.
Cool. Cristine, talk to us. How can the listeners connect with you?
So I'm really active on LinkedIn, putting out free informational content about the pre-IPO industry. So you can find me on LinkedIn under Cristine Healey, Healey. There's also my website, healeypreipo.com. You can sign up for my mailing list where I send a bunch of things. My candid insights about the market, how market trends are affecting negotiations for buyers and sellers, and occasionally deal flow too, depending on suitability. So you can sign up for my mailing list on my website or reach out to me and just get more info. And it's all free. And I just want more people to kind of get their feet wet and see if this is right for them.
Awesome. Well, thank you so much for your knowledge today. It was very eye-opening and awesome. So appreciate you. Guys, if you want to connect with me, you can always do so on Instagram. It's Brandon Elliott Investments. Otherwise, on Instagram as well, our business page, Credit Counsel Elite. If you're looking for funding as well, we're showing other business owners, if you're looking to start a business, grow and scale a business, if you're looking for the best terms and conditions, getting up to $500,000 with rates as low as 0%, we can show you how to do so at creditcounselelite.com. Going to creditcounselelite.com, and we have a 3-day virtual event coming up you're not going to want to miss out on, so check that out. You can go to that website and we'll be honored to bless you with it. With that being said, if you have not already hit that subscribe button to Ready, Set, Go Real Estate Investing Podcast, what are you waiting for? Right now is your time. Do that. Hit that subscribe button. You'll get the newest notification every Monday, and then we'll catch you on the next episode. Leave that 5-star review as well. Love you guys all so much. Have a blessed day, and we'll catch you next time. Thanks, Cristine.
Yeah.
This has been another episode of Ready, Set, Go Real Estate Investing Podcast, brought to you by Brandon Elliott. For more information, please visit BrandonElliottInvestments.com. Also, please don't forget to like, share, and leave a comment below. Thanks again for joining. Until next time, God bless.